Can your brokerage keep its value when you step back? You may have a recognizable name, productive agents, loyal clients, and years of local trust, yet the business may still depend on you approving every exception, calming every conflict, protecting every relationship, and remembering how the important work gets done. That dependence can feel like leadership because you are leading. It can also hide a transferability problem. If the company slows down every time you leave for 3 days, a future successor will inherit your calendar along with your brokerage. The name on the sign may survive, while the operating value underneath it becomes harder to carry forward. Exit planning is already on the minds of many business owners. The Exit Planning Institute reports that 69% of owners have placed exit strategy on their priority list. It also says 53% lack a written formal transition plan, and 78% still need to develop a transition team. Awareness has moved ahead of execution. A broker owner doesn't need a retirement date to work on this. Transferability improves the company while you are still leading it. It gives your team clearer decisions, gives clients more continuity, and gives you more options if your role changes by choice or circumstance. If you own a brokerage or lead one with the owner, like this video, subscribe to the channel, and leave a comment telling us which part of the business is still hardest to separate from one person: decisions, relationships, standards, or finances. This is the kind of question experienced relationships can make easier to examine. Inside the Real Edge Network, leaders can compare options with people who understand the weight of protecting a team, a reputation, and a local brand. Real estate can be lonely, but you don't need to grow alone, especially when the decision affects people who helped build the business with you. I would start with a brokerage transferability audit. Look at 4 assets: the brand, the leadership, the relationships, and the operating record. The question running through all 4 is simple. Can another capable person understand it, carry it, and protect it without needing you beside them every day? Begin with the brand. Your brand includes the name, visual identity, reputation, market position, client promise, and the expectations agents attach to working there. Write down what people believe they are choosing when they choose your brokerage. Keep it concrete. What should clients experience? What should agents be able to count on? What behavior would damage the name? Many owners have protected the brand through instinct. They know when a message sounds wrong, when an agent decision creates reputational risk, or when a marketing idea drifts away from the company's identity. A successor cannot inherit instinct directly. They can inherit clear principles, examples, approval boundaries, and a record of past decisions. Review the last 10 decisions where you said, "That isn't how we do things here." Remove any private client information and record what triggered the concern, which principle guided you, and what acceptable response you chose. Those examples will teach the brand faster than a page of adjectives. The second asset is leadership. Current brokerage guidance from the National Association of Realtors puts leadership depth ahead of headcount. It calls for clear decision ownership, coaching, and succession planning. Growth becomes harder to protect when the organization adds people faster than it develops leaders who can carry judgment. Make a decision map. List the recurring decisions that reach you in a normal month. Contract and legal questions should remain with the properly qualified professionals. For operating decisions, identify who brings the facts, who decides, who needs to be informed, and what crosses the line into owner review. Write a real job description for the owner role as it exists today. Include the decisions you make, the relationships you maintain, the standards you enforce, and the work you complete after everyone else has logged off. Then separate those responsibilities into 3 groups: work a future leader can learn, work that belongs with a specialist, and work the company can remove through a better system. This turns the owner's workload into a design problem the business can address. Then look for decisions that already have a capable future owner. Let that person make the next 5 within a defined boundary. Review the result afterward. You are testing judgment, clarity, and follow-through in live work. A succession plan becomes more credible when leadership capacity has already been demonstrated. Be honest about shadow ownership. An operations leader may have a title and still wait for your approval because everyone knows you can reverse the call. Agents will keep climbing past that leader if the organization rewards escalation. Give the role a real decision area, back the decision publicly, and coach privately when adjustment is needed. The third asset is relationships. A real estate business can hold a great deal of value in trust that sits between specific people. Agents call you because they believe you will understand the history. Clients refer people because your name carries a personal experience. Vendors make an extra effort because the relationship has been built over years. Map the relationships that would feel a change first if you stepped away for 90 days. Include key agents, repeat clients, referral partners, vendors, community contacts, and institutional relationships. Then identify who else in the business knows each person, understands the history, and can continue the relationship with credibility. This should feel human. Do not introduce a future leader through a generic handoff email and expect trust to transfer. Bring that person into useful conversations while you are still active. Let them solve something, contribute perspective, and follow through. Continuity grows through repeated proof. The fourth asset is the operating record. If a successor has to reconstruct profitability, obligations, vendor terms, agent agreements, technology ownership, and recurring deadlines from your inbox, the business is carrying avoidable risk. The operating picture should be understandable before a transition becomes urgent. NAR's succession resources define the work around critical positions, skills, talent, and staff duties. They also recommend continuous appraisal of the book of business and the succession plan as circumstances and leadership change. A folder created once and forgotten will age quickly. Give the continuity file an owner and a regular review date. Include the numbers a qualified advisor would need to evaluate the business: revenue by source, recurring expenses, liabilities, concentration risk, owner compensation, and the cost of replacing work the owner currently performs. This is a management view, not a homemade valuation. Use a qualified business appraiser, accountant, attorney, and financial advisor for decisions that require professional judgment. Once the four assets are mapped, run a 30-day owner independence test. Choose one operating area where you will stop being the default answer. Assign a decision owner, document the boundary, route questions correctly, and review the outcomes at the end of the month. Tell the team what you are testing so silence is not mistaken for disengagement. Track what still pulled you back in. Was the issue missing authority, missing information, missing skill, or a relationship that had never been shared? Each return to the owner gives you a specific transferability gap to repair. You can use AI to organize the audit after removing names, financial account details, client information, and confidential agreements. Give it your anonymized decision log, role map, process notes, and brand principles. Ask it to identify where the owner remains the only source of approval, context, or relationship history. A prompt could read, review these anonymized brokerage operating notes. Identify every decision, relationship, standard, or recurring task that depends on the owner. For each dependency, state the current risk, the information another leader would need, a safe delegation test, and the evidence that would show the transfer worked, separate documented facts from assumptions. Do not provide legal, tax, valuation, or contract advice. The output is a starting point for leadership work. The owner still decides which responsibilities can move, who has earned the authority, and where professional advice is required. Use the audit to find patterns across the business, then build one real transfer at a time. For an independent brokerage, one transition option to examine may be to partner with Real through its private label program. Real's January 2026 announcement says participating independent brokerages can maintain their unique brand identity while accessing Real's platform. This is one current example of a local brand continuing while the infrastructure behind it changes. Every owner still needs legal, financial, and operational advice before choosing a path. Your succession path might involve an internal leader, a family member, a merger, a sale, a partnership, or another structure your advisors help you evaluate. The transferability work supports all of those options. A clear brand, proven leadership, shared relationships, and an understandable operating record give you a stronger company while you decide. Here is the action step. Schedule a 3-day absence test within the next month. Before it begins, name the decisions that can move without you and the person who owns each one. Afterward, review every interruption. Pick one dependency to remove before the next test. If this helped you see your brokerage with fresh eyes, like the video, subscribe to the channel, and comment with the first area you are testing: brand, leadership, relationships, or the operating record. Share it with an owner who deserves more options around what they have built. A brokerage becomes easier to carry forward when its identity is clear, its leaders have real authority, its relationships extend beyond one person, and its operating record can be understood. Start before a deadline chooses the timing for you. Build the company so your next chapter remains a decision you get to make.